Hey guys, welcome back. Hope you had a good Wednesday in the stock market. September 22nd. Want to get you stoked real quick on this chart. We're going to talk about this and the SPY and a little bit of what Powell said and what he went over just very briefly, and talk about some technical analysis, some options on GameStop, the market crashing imminently. And yeah, that's what I got. Sub up, like up, comment down. Happy Money sticks around. You can follow us on Twitter also at Happy Money YT. Don't get me started on Adam Aaron. And we also have a Discord. It's in the description. So Powell spoke today, and that's where you see his volatility in the SPY. But basically said they are considering beginning to taper. The timeline I believe that he gave, it's pretty recent, so if I'm a little bit off on it, you know, find a source somewhere else. But basically it sounds like it could be as soon as before next meeting, which is in November, all the way up until middle of next year. So gave himself a big timeline. It seems like the middle of next year was when it would be done tapering, but it wasn't very clear to me. It sounded like they could start it before the next meeting in November, and it would potentially last till the middle of next year. I don't know. That's kind of how I perceive what was happening. He also mentioned the reverse repo limits. They bumped up a lot, so that's going to kind of help them basically move stuff around. Here's Walter Bloomberg's tweet about it. From 80 billion to 160 billion for an individual counterparty. So we've been seeing it steadily rising over $1 trillion today. I think it's all-time highs again at like 1.2, I think. Yeah, 1.28. I think there's a new high. So that might come up a lot now that an individual party can basically put in twice as much as they could before. So yeah, that's gonna be wild. Technical analysis on SPY, yeah, little bounce here, which is kind of what we're expecting. I set up that bullish play on SPY yesterday that I didn't end up closing out before market closed, but when market closed yesterday, it was down like 40%. I was like, oh man, it's kind of a big play on this big drop right here. But I held it. I saw the bull flag, saw the bullish MACD, I saw, you know, green over the 9 moving average. Everything was pointing bullish, at least to the short term. And yeah, we had the nice rip up here. I did close it before the meeting just because I wasn't sure. I wasn't sure which way this was going to swing. So it was a good gain though, like 60%. I kind of assume, I don't think we're going to make new highs. I think this 454.05 is probably the high on the SPY, or I don't know how long that'll hold highs. I think we might fill this gap in a little bit more, come back up to kind of this 9 moving average, which right now is at 442. Maybe not make it all the way there, but maybe melt up a little bit more tomorrow, and maybe even on Friday. But I am expecting the next leg down to be this week. Before the week is over, I think we'll have another leg down. Yeah, just because on the daily here we're still very bearish, and we have been, you know, red candles under our 9 moving average. We've got a bearish MACD. We had to bounce from that first very big dip. So we're bouncing up from that little consolidation, and then I expect another dip. And it might be till next week, but maybe sooner than that. We'll see. Depends on kind of how the market perceives and digests what Powell said. So, but short term, this is still bullish. The chart's still bullish. I'm kind of waiting for, I don't know if I'm gonna go bullish on it or bearish. I did open up some UVXY stuff that I might just scale into, because I think the next drop down, hopefully be a big one. We can profit on it. GME doing kind of what we expect, I guess. Just it's up a tiny bit today, but I still think we're gonna be coming down. On the hourly, we did cross over bullish. We've got a bullish MACD. We've got some green over the 9, so it's really just consolidating and flat. Maybe trying to grind back up to that 9 a little bit, but I see it coming down to this 180 support right here, and I don't know if that'll happen before Friday or not. Probably. If the market comes down and has another big red day like this, then I expect GME to probably do the same thing. So I've been flipping in and out of covered call. I actually bought calls on accident instead of sold them, which worked really well because it was like right here I bought them. I meant to sell them, and then it had a rally, and I made some on that, which was pretty funny. But now, yeah, now I'm not doing as well. Let's should we look at the options? Yeah, we'll look at options. Look at options real quick. So we've got, yeah, so I still actually have these calls. I bought some more. I bought some 220 calls on the rally, and it's basically hedged on my covered calls I have here. So my credit on my covered calls is 1,300, and then these calls cost 1,100. So I expect these to expire worthless. I'll probably sell them out. Hopefully we have a little spike of volatility to the upside tomorrow, and I could maybe they'll be up a little bit. And these covered calls, I will actually hold these overnight for tonight. I just took a big deep swallow on that one. A swallow of fear. Swallow of fear. Short puts we still have 3 195, and I might be rolling those over. Max pain this week is, I think it's gone down to 195. Yeah, so I might have to roll those over, and I might roll them over anyways. And if we come down more, the max pain will come down with it. The stock price comes down, then the max pain will come down. We did some other option plays. Well, the spy move worked well for us today. Let's see, where is that? So here's our spy play. Why did I say 929? Oh, because it's the credit. Yeah, this thing's a little weird. So this was the credit, the max credit, but I had to buy it back. So to buy it back, I spent, I think, 200 or 300. So basically $600 gain on it. It's kind of a big play. I usually don't do that much for credit spreads, but I want to start doing more confident credit spreads like that. Our shot puts down, as you saw. Yeah, this has got to come down with the market. History. There's the GME stuff I mentioned. I did buy 3 UVXY calls before Powell spoke, just in case it was very bearish. I want to start scaling into this next leg down on SPY. I might be a little early on it. These are for next Friday. I think by next Friday we'll have a move, but these might decay pretty bad by then. We'll see. I don't know how high it's going to bounce before it drops again, and if it'll just kind of consolidate and then drop, or if it'll bounce high and then consolidate. Anyways, here's the credit spread I closed. I did buy into Ater. This one's got a crazy short float interest, hard to borrow, high fees, hardly any shares available. So, and it's been, of course, bumped. I think the Wall Street Bets one. And so I did a spread on it. It's got a crazy upside. Had some sort of squeeze back here. On the daily, it's wild. It's a wild ride, but you can smooth it all out. If you look at the MACD, it's just been up, and then you can look at our 180 or a 9 moving average right here, and it's just been pretty consistent grind. If you don't look at all the volatility, it's just been kind of grinding up on that thing. So it's a little extended from it now, so maybe one more pump up, and then it'll kind of do one of these again. As long as it stays above the 9 and we have a bullish MACD on the daily especially, that play should work. I was looking for an entry today, and I kind of waited too long because it spiked up in the morning and premiums were high, and then it consolidated all day. I should picked one up around here, but I waited till here. But looks like it's come up a little bit. My play, probably not really. No, plays about even. So that's a 220, 2.5, 35 call debit spread, which is right here. You kind of visualize it. So max profit on it is 1,140. See, is that it? Yeah. And that's if it closes above my higher strike of 35 by expiration. Of course, it can go up there before expiration, and this is kind of what I'm expecting. If it really starts to rally, I don't expect to hold this thing till expiration. So that is one of the things that's nice about just naked calls, long calls, is that you can capture a lot of that volatility, but you really have to do better at timing it. This is more, I guess, it's better for a certain price by a certain day, in my opinion. But we'll see. That's the stats on that thing. Corsair is actually rallying up a bit today. And I probably am going, oh wow, okay. So I'm gonna probably leg out of that short leg of Corsair. I thought about doing it today, then it looked like it was going to keep dropping. So I don't know why it actually lost value. It must be the spread. Or no, let's see, the short. Yeah. Yeah, I don't know. I'm gonna wait on that one, but I might leg out of it basically. See, we legged into this call. We had these 65 calls. I had a bunch of them. Thing rallied up. They were up 200%, and then I sold calls. I sold the 70 calls. So now as it's settled down and the premiums have gone down in value, those ones I sold have gone up in value. Well, basically, if I closed them, it would be cheaper than the credit I received to open them. So up in value to me. So these are worth 46%, 250 bucks on that. I could close these back out, capture that premium, and then I would just I'd be back to my long naked calls. So kind of swing it around like that. And I could even do it with a different date. I wasn't even thinking. I forgot to do a shorter date on it, but I've got the same date on that one. So might leg in and out of that one a little bit. It's the same thing I've done with Hayward. Hayward. Kind of legged in and out of this, and I think we almost made these calls free, maybe half of it free, just from legging in and out. Here's that UVXY. It's actually not down much. Spread's pretty wide, but that's not bad. Pal did mention Wells Fargo, or someone had a question about Wells Fargo specifically. It got a little volatile there for a minute. Oh, there's a tear on a tear. Let's see that one. That's just because it's a debit spread. Oh, it is kind of ripping up a little bit. I did want to show you guys. Let's see, what was it? Yep. Well, okay, the PAL stuff. I'm not an economist. So if you want to know more about that stuff, you can go watch the PAL speech and questions. This DD is kind of interesting. So this is by Durf Mongol, and it compares it to Volkswagen. We've compared it to Volkswagen before, the GME squeeze. It definitely could be different, for sure. There's a lot of differences about it, but it's to me, it's interesting to kind of dissect it and see how it went and the price action. So we think Volkswagen squeeze was so quick, and in a ways it wasn't. I haven't really looked at the charts. He's got great charts on here. So we think of Tesla as like a long squeeze, and it was, but Volkswagen really was also in a lot of ways. So this is the only part of it where I'm like, okay. But basically use a GME chart that's logarithmic, where it basically, the numbers are, as you go lower, they're basically wider apart. As you go higher, they get tighter. So it makes our chart look much more like a bull flag than if you use a regular chart. So that's the only where I'm like, this DD, I'm like, okay, I guess. But yeah, if you look at that chart, and that's over 4 years, and then you compare it to Volkswagen's normal chart. So this is their normal chart. This isn't logarithmic. Yeah, so that's where it's a little bit weird, but besides that, I think this is a pretty interesting write-up. Talks about Volkswagen consolidating for 8 to 9 months. That's not something I've really looked into, but yeah, he's nailed it. I guess this is at least trading view charts, I guess. So here's GME's kind of 8-month consolidation. And again, this is logarithmic, so his consolidation has it at the top instead of kind of in the middle where a normal chart would. But it's kind of all the same, and it is, to me, it's consolidation also. Even a big wedge is like consolidation. That's, I think, what we're in, is like a big wedge. So this has been about eight months we've consolidated here since the January highs. And then here's the Volkswagen. Volkswagen did it for about 9 months. And then this picture kind of sums it all up. So this is Volkswagen. They had the rally, so this would be our January rally, and then they had this consolidation for 9 months. So kind of these lows, and this looks a little different to us than GME, but nonetheless, it is consolidation at a higher floor, at a higher level. And then it broke through that high, which would be us breaking through 450, and then it actually consolidated up there for what, like 2 months or so, 2-3 months. So that would be GME consolidating above 450 for 2 or 3 months, and then it really started to rally. And this lasted about a month, where it just kind of went crazy. This would be GME going to 600, 800, that range, and then it just fell off a cliff. And this is that Volkswagen dip that we've talked about. And this lasted, I guess, is this a daily? What is this? Daily. So this lasted like a week, just over a week, this dip, all the way back down to that previous support, which would be 4 something for us, 450. And then I think this was actually even over a weekend, from what I've seen. So on that Friday it dipped, and then Monday it had a huge gap up, and that's really where the top of the squeeze happened. Volkswagen, I guess you could say, had a squeeze a long time also, just like I guess a Tesla, or maybe how GME is. I guess Tesla's is more like years, but pretty long. But yeah, had that big gap up, and then of course the very top was crazy, and the actual peak after that gap up was 2 days. So I think GME's will last much longer, just the whole peak of it. But yeah, you can kind of see here, so that this consolidation of 8 months is kind of rallying up until then, and then had that. He's kind of saying that that's where GME was, 450, and then this is the 8 months we've just been through. So it's kind of pointing to like next month could be where we break out above and use that 450 as a support. This is something else that's very interesting. One of you guys actually mentioned it in the premiere, in yesterday's premiere on YouTube, saying that the 08 crash was the Volkswagen squeeze. I disputed it because I don't think it was by any means, but it was interesting to see the dates and kind of how it works with a crash, because the economy crashed in 2008 from housing market crisis. That's about all. I'll go into that. You can look into that more if you'd like. But when it crashed, this is the crash. So we were in kind of a bearish correction for like a year. I don't think it'll take this long. I think the markets move much faster nowadays than they did back in 2008. For a lot of reasons: high frequency trading, day trading, algorithms. I think everything's more volatile and moving quicker. So I think we are in kind of this downward bearish trend now, and it's possible that we will crash sooner, have a crash like this sooner and more violent. And literally that Volkswagen squeeze was like right at the crash. It happened right here during the crash. So it's kind of interesting to think about just how it all worked together. And the Volkswagen squeeze wasn't, it didn't cause the crash, and the squeeze wasn't necessarily, the crashing market wasn't necessarily a catalyst for the squeeze, but in some sense it could have been somewhat. I'm not going to go into all the details in the Volkswagen squeeze, but kind of just looking at the charts there was pretty interesting. I think it's important to know the massive dip right before the squeeze took off, where the former resistance then became support, was tested. GME follows a similar pattern. Then after breaking 43, I expect it to run up to maybe 6's 800s per Elliott waves, and then come back down and test that. This is all speculation on where it's going to go and when it's going to go, but to compare it to Volkswagen, I think is kind of interesting. And then also how Volkswagen did actually squeeze when we were in the middle of a crazy stock market economic crash. So I think those two things are coming to fruition at the same time, at least, because I think this is our top, and it might be bearish for a bit and then a crazy crash, or it might just kind of crash soon. And I think in GME's squeeze case, I think the crash will definitely be part of the catalyst to have GME squeeze. That being said, I think GME could come down. Actually, yeah, I just thought about it. That's what, because it had that big dip. It's getting crazy. You didn't even mention that. So that big Volkswagen dip, which one was it on? Yeah, this dip, 1, 2, 3, 4. I'm not going to look at those days, but literally that's like the exact same time I think the market was crashing. Wow. So that crazy dip before the squeeze might have been this exact same time, the exact same week. It might be. No. Let's see, June, July, August. I thought it was in October. Oh yeah, this is yearly, so July, August, September, October. It might be. So that's crazy. Anyways, that's what I got for you guys. GME, I mean, I don't know. If news is announced, I feel like it could happen sooner. It's just interesting to see how it all plays out with charts and with the stock market crash. NFT news, dividend news, I don't know. That stuff seems like they would have to have shorts cover right away. Cycle theory, it seems like they use some sort of other tools to kick the can down the road some way, because the futures and all that, it's not reflecting on here. It is on a lot of other random stocks though, like Sears, which is in our playlist or our watch list in our playlist, and a lot of other ones that were kind of theorized with that basket of stocks. So I don't know how that kind of plays out, but also actually I saw that the what was it, the credit default swaps in September, I saw a Bloomberg screenshot of it. If you guys have seen it, put it on our Discord. It was super spiked up super high this September, so I don't know if that's correlated, but definitely could be, I feel like. Thanks for watching, guys. Sub up, like up, comment down. Happy Money 6 round. Peace out.